As Bitcoin tries to pump through resistance, we have a lot of conflicting signs in the market. Morgan Stanley just filed for a Solana and Bitcoin ETF, but we also have the Coinbase Premium that went from positive yesterday to now negative today. Tons of spot buying from the ETF perspective, but a lot of longers in this market. In today's video, we'll be talking about all of this, going over the most recent Bitcoin price action and discussing some of my trades. What do I think could be happening next in this market? If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. First things first, as we normally do, kicking us off with the Bitcoin price action, you can see that right now, as I'm recording this video, Bitcoin is hovering just above that yearly open. Now, this is a pivotal level for us to continue to reclaim if we are going to see more upside. That being said, taking a look at the existing range, Bitcoin is now right at the top of the range. You can see that the top of this range is right around $94,500, and we've essentially been chopping around in this range since late November. So a breakout from here is inevitable in my opinion. The real question is, when will it occur, and will it occur sooner rather than later? I shared my positions in my previous video. I was actually down around $50,000 on a Bitcoin short, but late last night, as Bitcoin went ahead and pumped, I actually added to my position, and I am currently down around 3% on this trade. And all this while I continue to hold my Bitcoin long from the lows. This seemed to have pissed a lot of people off that I continue to talk about this Bitcoin long, but I have to keep reiterating it because my exposure still remains to the upside if Bitcoin is to have a massive move higher. You can see where I entered here right around those wick lows when everyone was scared to go long. That's when I went long. At this point in time, logically, it does not make sense to chase longs in this market as Bitcoin is right at resistance. Now, can we pump through this resistance? Of course, there's always a possibility, but from a risk to reward perspective, this is not an area where I want to be chasing longs in this market, even if we are to move higher from here, simply because I will continue to hold the one right at the range lows. And we need to discuss something. I've been getting some very negative comments when I shared that I was shorting the market simply because the price moved a few $1,000 away from my short entry. You guys are seriously making me consider not sharing any of my trades on the channel simply because of the backlash that I get when a given trade goes into the negative. I've shared profitable trades. I've shared trades where I lost. You have to remember that when I share a trade on the channel and it doesn't play out, I am personally losing money. And this is also another disclaimer. I would never recommend that you blindly copy me or anyone else in the crypto industry. That is a surefire way to get wrecked. You have to match what you're watching with your own analysis. And that also ties into the big disclaimer in the description down below if you haven't read it. Nothing that I discuss on the channel should be construed as financial advice. I am not a financial advisor. I'm essentially just a guy on the internet sharing his own trade setups and his overall crypto insights. Now, let's get back to the price action. So you can see here that we are indeed back above that yearly open, but we're also flirting right at resistance. In my opinion here, the way that we get a sustained move to the upside past this key resistance level is if the Coinbase Premium turns green again, of course. Yesterday, we had a little glimpse of green, as you can see on my chart. However, this morning, we ended up going back into the negative. And we cannot neglect the Bitcoin spot ETFs, where we got just under $700 million worth of inflows. It seems like as soon as the new year started, we hit a switch and we got a little bit more inflows than the ridiculous amount of outflows that we got going into the end of the year. So what is next here? You know what I'm looking at. I think that we're likely to reject from around this zone. Now, if you can't handle the emotions of trading this market, simply don't trade it. I have my spot exposure mainly in Bitcoin and Ethereum. I'm also holding my long from the lows. So if you don't think that this short will play out, don't just blindly enter a short. That is the silliest thing that you can do. I just play the probabilities, and right now, since we are at the top of this range and we have tons of downside liquidity to be grabbed, I am still favoring a move lower. The question isn't whether or not we move lower, in my opinion. It's where does the lower move stem from? Because you can see that historically, Bitcoin does tend to rally up to that bull market support band before potentially getting rejected deeper in the bear market. And if you're new to the channel, my base case is that we will likely have the opportunity to buy Bitcoin below $70,000 in 2026. I don't believe in this whole super cycle narrative where Bitcoin is just going to rip to all-time highs. But hey, if that's the case, I also keep my exposure in the market in the sense that I hold a lot of spot Bitcoin and I also have my long. So we'll have to see how the price action develops. If you've been watching me for a little bit, my base case has been pretty clear, and that would be a sweep of these lows, then essentially a move targeting the bull market support band, a rejection right around these levels, somewhere around $100,000, give or take a few $1,000s, and then a larger move lower below this capitulation when we had the whole tariff stuff. If you're trading this market right now, I would recommend to not be too aggressive because we are indeed at resistance. This doesn't mean that you just have to go absolute max short, although I am personally shorting, and it also doesn't mean that you should just be going max long. If you want to play this trade, only use a tiny percentage of your trading portfolio. Now, for me personally, with this most recent trade that I showed you where I was down yesterday around 25% in my video, I added to my position to reduce my average cost. But there is a scenario here that if Bitcoin does end up retesting lower over the course of the next few days, I may cut some of my position to reduce my size and then just let the rest of the trade play out. This way, I remove the max risk that I took for this most recent trade, which, as I've always said, is 5% of my total trading portfolio. That is the most that I will ever risk on a given trade. I know that seasoned traders will typically say between 1 and 3%, but for me, historically, between 1 and 5% has been a very, very good amount of capital to use while not risking too much from my trading account. So let's see how the price action develops. Right now, be cautious if you're trading this, especially if you're leaning a little bit more long, because in my opinion, we're hitting resistance and you can see that a lot of people are chasing longs at these levels. We have way more cumulative long liquidation leverage in the market compared to cumulative short liquidation leverage in the market. Now, can we continue to get a squeeze up? Of course, that's a possibility. You can see here that on this chart, right below $95,000, we have around $800 million worth of cumulative short liquidation leverage. However, this cluster is still very much intact, right below $87,000. Now, if you've been watching the channel, when I've been giving you these updates on the Bitcoin exchange liquidation map, we had a massive cluster right around $91,000, and I was always looking for that cluster to be grabbed. Well, that's exactly what happened, and now price is currently hovering right around the yearly open, right below resistance. When will we come back down and grab this downside liquidity? Because I do think that this is more than likely. Keep in mind, we also have the CME gaps that we need to pay attention to. If I can find the chart here, we do have that gap right around $90,000, and we also have a bit of a more significant gap right around $88,000. Over the past few years, those CME gaps tend to get filled quite quickly, and so I wouldn't ignore the fact that we will likely come back down and fill these gaps. But again, the main question is, are we just going to move higher out of here before filling the gap, or are we going to hit this crucial resistance zone, confirm it as resistance, which it appears to be doing so right now in the lower time frames, move lower, then go ahead and get that final breakout to the bull market support band. So outside of Bitcoin, I also wanted to discuss Bitcoin dominance because, as you know, I've been longing Bitcoin dominance since we formed this double bottom on Bluffin. I really like how you can trade the Bitcoin dominance metric, but you can see that dominance is indeed dipping here. Now, I have already secured around $7,000 on this trade, and I will continue to maintain my position because I actually still believe that Bitcoin dominance can get another move higher. Now, if Bitcoin is to break out of this range at this point in time, then altcoins will likely continue to outperform. However, if I am anticipating a rejection, maybe we get another sweep of the high and then we roll over, then I think that in this scenario on the way down, altcoins will severely underperform Bitcoin once more. Now, I also wanted to bring you through these charts because we know that there's a whale who shorted before the October 10th crash who's now up around $68 million in a week. His current positions: an Ethereum long, a Bitcoin long, a Solana long. So you can see that there's two sides to this market at this point in time. And speaking of positions, we have our friend James Wynn, who is also currently longing Bitcoin. And you can see that his average entry is right below $92,000. He's currently sitting at around a $300,000 P&L and around a $500,000 P&L by longing Pepe. So will James Wynn, the OG whale, be correct in his assessment of Bitcoin moving much higher from here? And all this is happening while Morgan Stanley just fired for a Bitcoin and Solana ETF. quite the turnaround. And something else I wanted to show you, there's a lot of people speaking like this. People will think this is a fake pump at the first sign of a pullback, but they will fail to read the room. New all-time highs will be coming in the months ahead. So here's how I would play this, because there's clearly a lot of bullish people, but then there's some people that are not that convinced, like myself, thinking that even if Bitcoin is to pump a little bit more, we will likely retrace below $70,000 in 2026, and we will have that opportunity to buy Bitcoin at lower valuations. The way that you want to play this is maintain some exposure in the market, but don't be all in. Never be all in. Of course, this is not financial advice, but as I've said several times before, I have my spot Bitcoin in case we are to move higher out of here, along with my spot Ethereum. That being said, just because I hold that spot, it doesn't mean that I am necessarily banking on a massive run up. But as always, in case I'm proven wrong from a trading portfolio perspective and we don't get blocked out at this resistance, I want to keep that exposure in the market with my spot and also with my Bitcoin long from the lows. And as we wrap up today's video, taking a look at the pre-market for stocks, you can see that the S&P 500 futures is technically up just a little bit, along with the NASDAQ futures, and the Dow futures is currently down. I have to say here, the market is relatively split, but I can't help but continue to see more and more posts like this on X as Bitcoin consolidates right around the yearly open. I can't even sleep just thinking about the run we're about to go on in 2026. I firmly believe that we can get that move up to the bull market support band, but I do think that Bitcoin will struggle around that zone only to go ahead and move lower. If you don't like what I have to say, maybe you don't need to trade the market in the same manner that I am talking about every single day, but that's my base case at this point in time. And that sums up today's quick video. Remember, if you want to know exactly how I am personally trading the market, you do have that first link in the description down below. That's where I share all of my own personal trades that I'm taking on a week-by-week basis before I go ahead and share them in my YouTube video. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.